Welcome to the Private Lenders Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. Chris and Jason here. We do appreciate it. So a frequent question that we get in the mastermind and people we're talking to is like, what goes into a file? Especially private lenders who are lending some of their own funds, maybe newer in the game, and they have a lot of the basic stuff there and they know what they're doing to keep their deals safe for the most part, but they're not totally sure or aware of everything that should go into an underwriting file. So we're going to be discussing that today and giving away our checklist. So anyone who's listening on audio after the show, feel free to go check out Hard Money Mastermind on YouTube, and you'll be able to download the checklist that we're about to review.
Yeah, we'll put it in the description on the video version of this podcast, and it's just youtube.com/Hard Money Mastermind. Pretty sure that's the extension to get to that. But exactly like what Chris said is, you need to know what to put in your file. It's not like, oh, hey, that looks like a good deal, I'll just fund it, right? Like you got to be professional to do so. And, if you came from the mortgage broker world or the banking world, like there's also a lot of stuff that you might not necessarily need. Now, if you believe you'll want it, then add it. But like you don't tax returns and some other, things that might not be necessary. So, I would recommend, again, take a look at this checklist. We're going to go through all these things right now that we're about to share on the screen. If you're watching this visually on YouTube, you'll just follow along that way. But even if you're listening to this on audio, it's fine as well. You'll still be able to get the exact grip of what we're talking about. You just won't be able to see it. And, add to it, mold to it. I remember when we started out, in 2007, before, everything was as digitally as it is today, I would just print this out and I'd put this, we'd have these yellow folders and I just put it on I'd staple it to the front of a yellow folder. And that was like the home base of like, okay, cool. Did we get the purchase contract? Did we get the construction scope of work? And then, we would pass the folders around in our office to different staff to make sure we had everything that was a necessity. Now, I know a lot of folks that have built out like loan sheets and underwriting or like processing and origination sheets. And we have one as well that we've used over the years. They have this built in. So like their staff and themselves can go through this as like the first page of their origination module. They're like, oh, what do we still need? To be quite honest, we've done lots and lots of loans over the years. And a lot of this stuff is kind of second nature to us just because we, do 20 of these every month and has been like that for a long period of time. So we can kind of eyeball it and see it. That doesn't necessarily mean that, the scope's not super important. Sometimes we just dictate to our portfolio manager of like, hey, in this file, make sure you get this as well. But nevertheless, let me share my screen real quick so you can see this. Hopefully you can see this if you're watching this on YouTube. So we have this broken down to purchase, refinance, commercial, and then funding approval. And we'll talk about funding approval last because those are the most important things that you need before you can send a wire, before you can approve the loan and close it. That's super important. Now, again, there might be things inside your business that you want to add to this. This isn't necessarily everything, but this is typically what we have on things. And I'm going to spend the majority of the time on a purchase transaction, just because that's a lot of the stuff that we do, fix and flip and fix and hold and stuff like that. But there are some items under like refinance that we'd add if it was a refinance or a commercial property. So obviously you'd want to add the purchase contract into this. We like to print out a tax record. To be a lender, like you got to have access to MLS in one way or the other. And we like to look on tax record and pull a tax record just to know and confirm the exact spelling of the property. We also like to compare, acreage and square footage of the property and, just lots of other items that you can see on the tax record. We print out a term sheet and we want them to sign it. We want to make sure they pay our valuation fee. Typically, we charge $400 to do an in-house inspection and valuation of the property. We order flood certs because that's obviously important to see if the property is in a floodplain. If you need to order flood insurance, obviously some areas of the country that's more prevalent than others. And again, these aren't in any particular order as I go through these. This is just kind of the way we have it labeled. We also set up a folder inside Google Drive. So we use Google Drive and the Google apps for a lot of different things, but for Google Drive, we'll set up different folders. So it'll be like, active loans, closed loans. Sometimes we'll have, we'll label them based on who the loan originator of the office is. So for instance, the way we have everything set up is, let's say the borrower is Plantation LLC. It would say Plantation LLC /123 Main Street, Rockville, Maryland, 20853. That's how we would label everything. So our loan sheet would be labeled that, and our loan folder would be labeled that. So we'd set up a folder inside Google Drive, and then we would plop all of these documents and organize them all through there. Obviously, the LLC docs or the corporation docs. So if it's an LLC, articles of organization, operating agreement, EIN number, and certificate of good standing. If it is a corporation, you'd want articles of incorporation and maybe some bylaws, still operating agreement and good standing, EIN, things like that. Asset statement or bank statement, it's up to you kind of how detailed you want to get, but we recommend definitely getting some sort of bank statement and asset statement. Copies of the guarantor's driver's licenses, and their also a copy of their credit report. We use something called factual data to order our credit reports. We also order our flood certs through factual data. A detailed scope of work and budget, contractor bids, draw schedules, things like that. That's important to put in the file. Property insurance. So the most standard property, there's lots of different types of property insurance, but the one that we use the most is the builder's risk with liability. It's in essence, it's either two policies or combined into one policy, where you have builder's risk coverage, which covers building materials and hazard insurance, along with liability protection. So that's important. Obviously, if you're doing a bridge loan on a rental property and it's occupied, you get some sort of rental policy.
That was one thing I was going to mention real quick, since we're on the topic, because a lot of people are closing loans with the wrong kind of insurance. Like, just because they plan to put a tenant in there after construction does not mean you can have a landlord policy in there right now. And if it's vacant and no construction is happening, it has to be a vacant policy, which is the most expensive. So something to point out real quick, and just be very, very careful on the type of insurance for the situation. Because if it's wrong, like you're not covered.
Yeah, you're not covered. Just because you have an insurance policy in place, if it's the wrong policy, good luck trying to collect on that. The insurance companies love saying no to policies to pay. They don't like paying out. Insurance companies are a for-profit business. That's a completely different conversation. Anyways, so all the title work, the title commitment, the CPL, all the title stuff, that's gonna obviously, you'll go through with your attorney. Who's ever doing your loan docs should hopefully be reviewing the title work as well, to making sure you have the best policy for you. That's obviously super important. But make sure that's obviously in place. If you want to add a loan application, if you have any particular loan application, you can add that in there. If you want the borrower to fill out a personal financial statement, you can put that in there. If they're buying it as a short sale, make sure the short sale agreement's in place. If they're buying a property and there's renters already in place, make sure you get all the leases that you can review. If it's a condo, definitely make sure you're getting a condo questionnaire and insurance. Condo insurance, typically what happens is, if it's a condo building, typically you want to be added to the master insurance policy. There might not be an insurance policy for exterior and hazard for them to get. It might just be the master insurance policy that you want to be added as a loss payee or mortgagee on. But definitely get a condo questionnaire as well, so you understand what's going on in those condo units. Obviously there's the term that you've probably heard called non-warrantable condos, but for the most part, what that means is you're not going to be able to get like Fannie or Freddie or conventional financing for that. They typically will only trade in cash, or you might only be able to get a hard money loan, and that's something that you're going to really have to consider when you're underwriting a file, because do you really want to do a loan on someone who doesn't have an exit strategy besides just paying it off in cash because it's not warrantable? Typically that happens if it's over 10 or 15% delinquent, or if there's too much non-owner occupied unit owners, meaning, let's say there's 100 units in the building, 50 of them are owned by landlords. They're not living there. That sometimes will make it non-warrantable. Also, some sort of loan write-up. We have that built into our underwriting loan sheets, but in essence, it's just kind of a breakdown of what the whole deal looks like in general, very, very quickly. So anyone in your organization or your capital investors can look at it. Definitely encourage you to do a client meeting, meet all your borrowers. It's not just good for underwriting, it's also good for business development. I know a lot of lenders, as they're starting out, are busy or they think they're busier than they are, but client meetings go a long way, especially going out to the property and meeting the borrower. It helps you with underwriting, and it certainly helps turn into repeat borrowers. And the last thing we have on this particular section is double check spelling on the loan application and your file folders. If you're raising capital, you need to be as professional as you can with your capital investors, and you need to be as transparent as you can. If we have a capital investor in a file, everything we have access to, the capital investor has access to. And the last thing you want to do is show a capital investor a file that's just, all over the place. We like to label everything very clean, very neat, so it's very easy and organized to go through very quickly. Anything else to add to that, Chris? And then I'll add a few things related to if it was a refinance.
No, I think that was the important stuff.
So a few things that we add to if we're doing it as a refinance, we'd get the HUD from the original purchase. We also would probably like to get, if we're refinancing an existing mortgage, we want to make sure that it wasn't a primary residence or consumer loan originally. So we always get the mortgage note as well to make sure, because you can't, for the most part, refinance an investment property that had an original note that was a primary resident note to begin with. That could fall under consumer laws if you do that way. So it's good to get that note. It's definitely good to get the original purchase HUD, just so you know what they originally purchased it for. Make sure it coincides with the tax record shows. Leases, another good one's getting a handwritten and signed use of proceeds letter. Obviously, if the use of proceeds letter is typed and signed, that's fine, but it's better if it's handwritten. That's the best way to do it, which in essence is another way for the borrower to delegate or to declare, I should say, what the money's going towards. The money can't go to consumer purposes. It's got to go to business use purposes. Let's see. I think that's it for, a few added items if it's a refinance. And again, there could be some additional things that you add to this. I wouldn't take anything off of this list, but if there's some certain things that you want to add here and there, which we certainly have as necessary, there's times that we've got W-2 statements, and we've got lots of asset statements, and we've even got tax returns. We get tax returns sometimes if the borrower is self-employed and we're really nervous on their repayment plan, or it's a self-employed borrower who's doing a buy, fix, and rent, and they're going to put a tenant in there, and they don't, and we want to make sure they have, enough money to cover the debt service without the, until it gets rented, or without it getting rented. So that'll happen. A few things on commercial stuff. Typically we charge a little bit more due diligence on commercial, anywhere between like $1,000 and $2,000, depending on some of the due diligence items that we need. We've done podcasts, and we've also done very detailed training on commercial underwriting in our Hard Money Mastermind group. If you're not a member of that, check out hardmoneymastermind.com. And we've definitely done monthly coaching on that. We'll do environmental studies. We'll ask for any previous appraisals and evaluations. Although we still order our own evaluations, it is good to see if there's any previous ones. We will get business financials, income and expense, asset statements, balance sheets. Another one, sometimes tax returns, in order to to see how the business is doing. Definitely get all the leases, surveys, and sometimes even zoning reports. And there's definitely other things for some other special purpose commercial buildings that we'll get, but this is kind of a good start of that. Anything else on that to add before we kind of wrap this up with funding approval?
No, I think that's about it for commercial stuff. Okay.
And the way that we have this, and we have this on our same like sheet that we use, our closing checklist, just because, it's just a good spot, to spot check it. But for funding approval, if you can see, if you're watching this, it's on the right-hand side. In order for us to send a funding wire, and you as well, these are a few things to make sure you 100% have in the file. Number one, the approved HUD one, right? Make sure you approve the final HUD one and it's good to go. Make sure the insurance is paid, not on the HUD one, outside of closing, right? You've heard horror stories that we've talked about, we thought the insurance was collected on the HUD one, and it was collected on the HUD one. But guess what? After closing, the processor at the title company had this check made out to the insurance company, made out to the exact amount, and they reached out to I don't remember who, somebody, the buyer, and said, "Hey, here's the insurance. Who do I mail this to?" And they never got back to him, and the check stayed in there forever. And 6 months later, when there was an issue, we were trying to figure out, and we found out that the insurance was never paid. You go back and they say, "Oh yeah, the check's right here. It was just never sent because we didn't know who to send it to." Make sure the insurance is paid by credit card up front,
or sent to the wrong place. Like we learned this early on in our private lending days, where it was on the HUD to be paid, and maybe it did get sent. Like that's an example. We didn't know who to send it to, but maybe it gets sent to the wrong person. Maybe it's made out incorrectly. Whatever the thing is, it's just all too common to get that notice of cancellation like a month later, a month after closing, and you've been not covered for that time. And so, yeah, exactly right. Just to have them pay it over. They might, complain a little bit. Why do I have to pay it? I can just pay it on settlement statement. Just have them pay it over the phone. Everyone's covered that way, and you can move on and close your deal.
Sign closing instructions. I really, really hope anyone who ever has done a loan, that the attorney that's doing your loan docs also has, formal closing instructions related to the, how it's set up and what the requirements of the title company are with docs and identification and title commitments and endorsements and things like that. Make sure that's signed. Anytime there's a title claim, that's the first thing that has to get sent to the title company is the signed closing, our proof that we got signed closing instruction back. And you got to call the title company to confirm the wire instructions. There's way too much wire fraud out there right now. We
have to call to confirm.
Yeah, we almost got stuck in wire fraud last week, where title company called us to verify our wire instructions, and somebody altered our payoff statement. The payoff statement looked the same, except they changed the wire instructions at the bottom, and they called us. We're like, wait a second, those aren't our wire instructions. Make sure you're calling title companies every time to confirm wire instructions, or your borrowers if you're sending, ACH or wires back to them. Yeah. Anything else to add to that, Chris? We'll wrap this up.
I just want to kind of emphasize the purpose of this whole thing is that when we work with, new consulting clients or people who just recently joined the inner circle, even for experienced lenders, a lot of things are missing from this list. It's just a case. And if you're talking about some people who have a good amount of liquidity and are lending to a few local real estate investors I know, then you're talking about tons of things are missing that should be in the file. And some of the things seem a little nitpicky, and do you really need that and sign closing instructions? But like the answer is yes, because we've seen situations for everything on this checklist where it became super important in some kind of default or whatever scenario where we had to have that in the file. So even if it seems a little nitpicky, treat it seriously, because it's not until it is. And when it is, then you're talking about real money on the line, hundreds of thousands or maybe $1 million of a loan amount, something like that. So yeah, like we started with, we are going to post this on, if you're not watching on YouTube, it's going to be posted on the YouTube. It's probably just easiest to search Hard Money Mastermind in YouTube search bar and find our channel. Subscribe while you're there, because putting out every podcast we do goes out on YouTube in video form as well. And yeah, download the checklist, use it, customize it as you see fit. So we definitely appreciate you checking out the show. And also stay tuned for upcoming announcements about the November Inner Circle meeting. The details are not finalized yet, but we're working on it. It's coming out soon. It's going to be November in Tampa. So we'll start letting everyone know very soon about where to go to apply to come to that meeting. And we will see everyone here next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.